All right, guys, we're back with another video. This is one that I just found and pretty interesting. Um, Talking about the opportunities that are in the market right now that are I won't say once in a lifetime, but once in a in a generation or maybe once every 10, 15 years. The market gives you a really good entry, a really good opportunity to buy at the dip, so to speak. And there's videos talking about that. So I figured I'd review it and just give my thoughts on it. But let's jump into this. And thanks for watching.
If you had bought $10,000 worth of Microsoft shares exactly 20 years ago, that investment would now be worth $140,000. A $10,000 investment in Google would now be worth $250,000. And if you had invested in Amazon, the $10,000 investment would now be worth $1 million today.
All right, so let me stop right there because I hate when videos do this type of thing because let's be honest, 99% of us would have sold like somewhere in here, right? We would have sold, when you're up, 500%. No, most people don't hold a million percent, you know what I mean? Or whatever the percentage will be. That's not a million, but whatever, 100,000%. So it's kind of disingenuous, I guess you could say, to be like, oh, if you had 10 grand in an Apple, you have $1 million now, or 10 grand in Amazon, you have $1 million. It's like, well, dude, who holds for that long through all the ups and downs, and it goes up and then it goes below your entry and then it comes back. It's like you literally have to just buy it and forget it to hold that long for most people. I actually did just hear a story of a lady yesterday who had $10,000 in Apple. She bought in like the '80s, and she held it, and she got a ton of money off the dividends and stuff like that now. But that's so rare. Like I mean, so when you're talking about something like this, there's like one out of every 5,000 people actually hold that long. Kind of the same thing with Bitcoin. Most people have Bitcoin, and no, not many people held it to where it is today. Because once it went up 100 or 200%, they got out thinking that it was kind of a game anyway. But every once in a while, you get, like we talked about, these once in a lifetime opportunities, and maybe there's some coming up now.
Today. These software stocks, along with many other companies just like them, have experienced exponential growth over the last 20 years, providing incredible returns to early investors. But the next
True.
20 years are not going to look like the last 20 years. The winning stocks of tomorrow won't be the same as the ones from yesterday. A new market dominance is coming, and the stock market panic that we are seeing today is providing a unique opportunity to catch it. Our job at Bravos Research is to find the best assets, sectors, and stocks regardless of market conditions. We're currently up over 50% on 3 of our trades on gold. We're up over 30% on our trade on BYD. We're up over 50% on a stock called UAMY that is benefiting massively from the trade war with China. And in this video, I'm going to show you the next big trade that we're eyeing. By the way, this is your last chance to take advantage of the 30% discount that we're doing on our service at Bravos Research to celebrate hitting the 500,000 subscriber mark. So if you want to have access to made up about 5% of the S&P 500 index, with companies like Microsoft, Oracle, and Adobe. As the sector experienced extreme growth over the course of the last 20 years, we now have software companies making up about 27% of the S&P 500, with giants like Microsoft, Alphabet, Amazon, Meta, Netflix, but also Adobe, Salesforce, Oracle, and ServiceNow. Software has gained an absolutely massive share of the US stock market, but as I'm going to show you in this video, we may have seen it reach its peak, and other
Uh, I'm not so sure about that. We'll see what he has to say later in the video. But this software has reached its peak. Um, Not so sure about that. Tech software companies is that they're only going to become more valuable and more important as AI continues to grow and AI continues to become ubiquitous in basically every type of market. And you have to have the hardware and the cooling and the data centers and things like that to be able to run the AI, but you all have the software to be able to manipulate it. So it's like you kind of need both. You know what I mean? But we'll see what he has to say. But that's an interesting take.
other better positioned industries could begin to displace the software industry. But before we look at that, we first need to understand why software came to dominate in the first place. The internet boom triggered extremely high demand for software. Businesses needed websites, emails, e-commerce capabilities, digital accounting, data crunching, all things that require software. But despite this high demand, the supply of software was very limited. Software was a rare, precious resource. The reason for this is because the barrier to entry was extremely high, meaning it was difficult and expensive to launch a software company. Few people actually knew how to code software in the early 2000s, and back then you didn't have cloud computing, so software businesses actually needed to buy physical servers, which was expensive. The launch of a single software product in the early 2000s could cost hundreds of thousands of dollars. And
This is true. Back in those times, software was difficult to produce. There are a lot of times there was you had to have, physical servers to be able to run your software. It was expensive to find, the talent coders to be able to actually, code the languages to be able to run a software properly. So at the time, yeah, that's true. Like, I mean, it was very scarce resource and expensive to build. But now, I mean, it's cheap. You have AI that can build your software. There's a million different people that can code, so it's not really that special to be able to code. And it's one of those things where software has become kind of a commodity and not really a AR luxury. So maybe I kind of see where he's going with this, but let's let him keep talking.
And this high barrier to entry meant that existing companies faced very little competition. So this was an industry with an extremely rapid rate of growth and very low competition. But today the situation has changed. The software industry is still experiencing growth, but it's much less rapid than in the early 2000s. Back then, the entire world needed to be digitized. Today, most companies have already adopted all the necessary digital tools that they need. And in terms of competition in the software industry, it has become incredibly high. The number of software developers has quadrupled over the last 20 years, and they have much more efficient tools to code with. There even exists no-code platform, which lets users build applications and software without even needing to know the basics of coding. And the cherry on top is, of course, artificial intelligence that is revolutionizing the software industry by generating code all on its own. So lowering the
Yeah, this is what I'm talking about. Like the barrier of entry to software is like basically non-existent. You can have no idea how to code, no type of coding background, and you could literally build almost anything using AI. So it is a very low barrier to entry. And what happens in any type of business, there's a low barrier to entry. Prices come tumbling down, values come tumbling down because not anybody can get into it. A part of what makes businesses and things valuable is its scarcity and the difficulty of being able to implement and execute on it. So like if you can't, so if whatever you're doing is very easy for other people to do, then chances are it's going to be pretty tough to make a buck out of it. But let's keep going.
barrier to entry for software companies to practically zero. This is why, although between 2002 and 2020, the software sector outperformed the S&P 500 by 239%, gaining a significantly larger share of the US stock market in the process. But since 2021, believe it or not, we've actually seen software companies underperform the S&P 500. Since their peak of outperformance in 2021, the software sector has underperformed the rest of the stock market by 15%. So that's
That's
4 years
crazy.
of underperformance. Now, don't get me wrong, the software industry will keep on growing, but it is unlikely to experience as much growth as it has over the last
Okay,
20 years. So now you might be wondering, what is
that's
going to
fair.
take software's place? What industry will be outperforming all the others over the next 10 years? Well, to answer that question, we need to identify an industry that has an extremely rapid rate of growth and also has a very high barrier to entry, limiting competition, just like software did in the early 2000s. We think the semiconductor industry fits that bill today and could see massive growth over the coming years. Demand for semiconductors has been growing exponentially over the last 2 years and is very likely to keep on growing at a
Yeah, I mean, this is uh, should be to most people at this point fairly obvious. Semiconductors, the chips that the AI and all these other uh, systems run on that need a ton of computing power. They're running off of these semiconductors. This is what the platform that all these other things are being built off of. So absolutely, manufacturers of those chips are going to be and are already seeing massive amounts of growth. And what we just talked about is one of the reasons because it's very hard to create a manufacturer, semiconductor company that manufactures good chips. Like it costs billions of dollars to make a plant before you sell even the first chip. So what we talked about is the barriers to entry. Like there are very significant barriers to be able to create a semiconductor manufacturer. Like it's like it's not impossible, but it's very, very difficult. And the competition is very good at what they do. So like Nvidia, AMD, places like that, like they know what they're doing. They're very good at it. And even if you were to want to start one, if you had a new mousetrap, they'd be able to easily essentially copy it and make it cheaper because they have the economies of scale to do it. So like it's tough to be able to break into a sector like this. So you guys just heard an alert. I have a couple of trades going on right now at the same time, but I'll look at those after the video. But yeah, this makes a lot of sense that semiconductors will keep on growing.
A very rapid pace. Similar to how businesses needed to adopt software in the early 2000s, today companies need to adopt AI. And the biggest bottleneck for AI adoption today is the semiconductor industry that has an extremely high barrier to entry. For starters, there's a limited talent pool with very few true experts in nanochip manufacturing required to build AI semiconductors. This also happens to be an extremely capital-intensive business. It costs about $10 to $20 billion to build a semiconductor lab. So that
Yeah,
makes
exactly.
competition in the semiconductor space virtually non-existent. With low competition, companies can easily increase their pricing and so increase their profit margins. And that's exactly what we've seen happen with the semiconductor sector over the last couple of years. It has gone from 25% in early 2023 to now almost 40%. So this combination of high growth and low competition puts the semiconductor industry in a similar position to where software was in the early 2000s. Now, I know what some of you are going to say, but Peter, semiconductor stocks have already posted ridiculous returns over the last few years. There's no way that can last. And indeed, the semiconductor industry has gone from representing about 6% of the S&P 500's total market cap in 2022 to now standing at about 12%. So it has already gained a significant share of the
Don't let that stat fall on deaf ears. That's actually incredible growth as far as a percentage of the S&P. A very short period of time. I'm talking in 3 years. It's doubled in its representation of the S&P 500. So that's a huge growth speed of growth. And Nvidia is of course a big reason for that. AMD also kind of brings up the rear when it comes up talking about semiconductors. Um, it's a joke about AMD called the advanced money destroyer because the stock always, oh, no, it almost always, underperforms what it should be doing. So it's very frustrating. A lot of times, CEO gets on the earnings reports and doesn't really do a great job on telling the story of the stock and what the company's got going on. So it seems like there's always a bottleneck or a headwind with Nvidia. But not Nvidia, but with AMD. So the advanced money destroyer, that's AMD. If you want some type of exposure to the semiconductors, then buy some Nvidia, and stay away from AMD.
market.
But
But if we compare that
this is not financial advice. It's just my opinion.
to the 27% market share of the software industry, you can imagine a world where semiconductor stocks gain much more ground than they already have. In the early 1900s, the industrial giants of US Steel, Standard Oil, Ford, and General Motors together made up approximately 40% of the total US stock market capitalization. Is it possible that artificial intelligence ends up creating this kind of extreme dominance of semiconductor companies in the S&P 500? We're certainly not ruling that out. This is why we are closely watching the semiconductor sector for potential trades at Bravos Research. We haven't initiated any just yet because market volatility is too high, and these stocks are currently trending lower, but as soon as the market shows signs of starting a sustainable rally, we'll be looking to initiate trades on semiconductor stocks again, as the next leg up could be just as aggressive as
SMH, by the way, is the semiconductor ETF, or whether they, just so you know, like, and those, 200 SMA 150 SMA, 100 SMA. Those are simple moving averages, so the average of price over the last, however many candles. Just a little bit of trading knowledge you want to have to know what is showing on the screen. But yeah, like I said, NVIDIA, if you want just a straight up, direct exposure to the market leader of semiconductors, that's NVIDIA. But if you just want to kind of spread your risk out over the entire sector, then SMH is the best way to do that.
2024. We'll be picking the best names in the sector that we think will be outperformers in the next bull market in semiconductor stocks. Again, if you want to have access to all of our trades, make sure not to miss the 30%.
All right, so that's the video. This company is Bravos Research. They have a YouTube channel that you can check out. Obviously, so go check them out. It seems like they have some pretty good stuff on their channel. That they do some, fairly good DD on different opportunities and different stocks. So check them out. I mean, I can't vouch for them. I don't know if they're any good as far as their prescriptions and stuff like that, but give them a try if you want to. This is what they're doing a deal. But that's the video for today. Again, the market is very volatile right now, but they'll find a bottom sometime this year, more than likely. And you want to be on board for the next bull run because it's going to be furious. So anyway, like and subscribe to the video, and leave a comment. Let me know what you think of this video and my analysis of it. But thanks guys for watching, and we'll see you on the next one.